It is not always possible, and let me show you on this chart. It's not always possible to draw a VTL for a particular thing. Well, let me not get bogged down in the details too much. But basically, what makes a VTL outdated is if Sentient Trader cannot draw the most recent VTL, which is the VTL that joins the most recent two peaks or two troughs, if there isn't one available, because, for instance, the two troughs should be an upward pointing VTL, and maybe the two troughs are positioned in such a way that the latest trough is lower than the previous one, so it cannot draw the most recent VTL. Then it will draw the previous VTL, which is an outdated VTL, and it is a VTL that has already been crossed. Okay. It's a VTL that has already been crossed by price. Sentient Trader still draws it on the chart so that you can look at it for historical benefit, but it won't use it for making trading decisions. Okay, so an outdated VTL, the quick answer is an outdated VTL is a VTL that has already been crossed by price, but it is still plotted on the chart by Sentient Trader because it is of historical interest. You can look at it and you can say, oh, look, that's where price crossed that VTL. Okay. In the very early days of Sentient Trader, when we were doing beta testing and so on, Sentient Trader used to draw VTLs going back quite a long time, and it was just horrible. You ended up with so many lines on your chart that it was a mess. So it, of course, now only draws the most recent one, or the most recent one, even if it is outdated. Okay, so here I have an alternate analysis. Let's just zoom out again and show you the big picture. This is again an analysis that includes if I show the semicircles, it includes the 6 year cycle. So what's the difference with this analysis? Well, in fact, the only difference is what's been happening more recently. One of our users, who I believe, I think I saw Jose's name come up, is on Trader Chat today. A few months ago on a Trader Chat, I was talking about the euro to US dollar, and Jose said, could the same reasoning apply to the S&P 500? I won't go on about it too much, but if we draw an 18-month FLD, you will see that way back in July of 2010, when most people agreed the 18-month cycle trough occurred, price, and let's change this to median price, hardly dipped below the 18-month FLD. Can you see that? I've just zoomed in there. So here, price hardly dipped below, and let me turn on this whiteboard. Over here, price hardly dipped below that 18-month FLD. Okay. And okay, there we go. And so, as Jose pointed out, that calls into question the positioning of an 18-month trough here in July, because price wasn't really below the 18-month FLD. However, in August, as you can see over here, price did drop below the 18-month FLD. So is it possible that, in fact, the 18-month cycle should be positioned in August of 2010? So I took the challenge, and I got full Sentient Trader to perform an analysis on that basis, and got it to position an 18-month cycle trough in August of 2010. If you do that, it's another alternate. It's a possible analysis. I don't think it's a very good analysis as a matter of interest, but anyway, when you do that and position the 18-month cycle trough over there, then of course you can see what's happened more recently, and that is that the trough of the 4th of October is found to be a trough of only the 40-week cycle, not the expected 4.5-year cycle. Okay, so I see some questions. Oh no, it's David sending private messages to everybody. Okay, all right. So in this analysis, the 4th of October trough was the 40-week cycle trough. Okay, I've spoken in previous trade chats about how you compare analyses, and I'm not going to dwell in too much detail on this particular one. But I'm not absolutely convinced about this. And we know earlier from looking at the FLDs and VTLs that, of course, this trough was at least a 40-week magnitude, possibly longer. In order for this analysis to continue to play out, of course, what does the market need to do? Well, it needs to come down and it needs to form the true 18-month and 4.5 years, not too distant from now, probably sometime February, March, April this year. Okay, if the market suddenly turns down and starts moving very strongly downwards, then this would most probably be the analysis that turns out to be true. But one of the reasons why I'm not very keen on this analysis is this situation over here. Let me drag the chart over. All right. This is what I call a linked. This is not what I call. This is what we call a nest of lows, and the linking boxes, those grey boxes, show us the sort of period of time in which various cycles expected to occur. This is a very displaced and staggered nest of lows. Very displaced and staggered nest of lows are generally a sign that the analysis is not very good. So let's continue our investigation. I have, in fact, created another analysis with another expert model. I don't think it's that one. It's this one over here. And this analysis, let me zoom out. With the big, what is it, right here? This analysis also considers the 6-year cycle, which I'm fairly convinced about, but it takes a different approach to what's happened very recently, and that approach is, as you can see, that the 18-month cycle trough occurred in July, and that a 40-week cycle trough occurred in March of last year, a beautifully straddled 40-week cycle trough, which we spoke about early last year, and that the trough on the 4th of October was of only 20-week magnitude. Now we know that price crossed the 40-week LD, and so there is a contradiction in this analysis. Where's that 40-week FLD? There it is. Let's zoom in. Price crossed that 40-week FLD. That tells us that there is evidence that, in fact, this must be a trough of at least 40-week magnitude. So we have a really interesting situation here, because we have an analysis that is good. If you look at it in detail, I won't bore you with all the subtle details, but if you have a look at the details of it, it's a fairly good analysis. However, it is contradicted by price crossing this 40-week FLD. That is probably reason enough to kick this analysis out and say this analysis is no good. However, markets are never perfect, and it's one of the great things that makes trading markets really, really exciting. Markets are never perfect, and so sometimes price crossing an FLD is concrete evidence that actually proves, with retrospect, not to have been true. Sometimes those price crossing FLDs aren't true. I know there are Hurst purists out there who are probably shouting at their computers now, and saying everyone should be considered seriously. Of course, you must take every price cross seriously, but markets aren't perfect, and sometimes one needs to give things a little bit of leeway. However, I must say this looks like a textbook FLD cross. Okay, price has crossed this FLD absolutely perfectly, and so I am not inclined to give this particular analysis too much space. Why do I say a perfect FLD cross? Well, you've got a nice 90-degree cross of the FLD. You see that price sliced right through it. It's a perfect FLD cross. So I would be inclined to take note of that FLD cross and to say that this analysis, although it is interesting, is very unlikely to be true, and that this analysis is much more likely to be true with the 40-week cycle trough over there, or in fact the default analysis that Sentient Trader has been performing is also quite possibly the the true analysis. Now, what's the difference? I'm going to sort of wrap up now. We're getting to the end of our hour. What's the difference? I presented various different analyses, but summarized it by presenting only two. This is the one, and let's go to not that one. And this is the other one over here. Okay. So these are the two alternate analyses. The one says that the trough on the 4th of October was of 40-week significance, and the other one says that the trough on the 4th of October was of 4.5-year significance. Which one is true? Which one is right? What do we do? Well, in fact, what we would do if we believed in either one of these analyses would not change very much. Okay, it's got to do with what I talk about, what I call the robustness of Hurst cyclic theory. Why is that? Well, if this analysis turns out to be true, then what are we expecting? We're expecting price now to fall into a trough of the 20-week cycle towards the end of January. Okay, so we're expecting price to fall and come down to a low level than it is at the moment. And if we put up some FLDs, you can see there's a bit of a cascade pattern developing over here. So we are expecting price. Let me just draw it. We're pretty much expecting price to come down and form a trough of the 20-week cycle. Where would we expect it to be? Well, if this analysis is true, all right, then of course we would expect this 20-week cycle trough to be higher than this trough over here. So in other words, we'd expect it to come down, somewhere here, all right. And if you don't feel like drawing squiggly lines, you can get Sentient Trader to do it for you, and you can just show the FLD. You can just show the FLD pattern. Let me. There we go. All right. Let's show the FLD pattern for the 80-day cycles. Fine. Okay. Let me turn off the FLDs. There we go. As you can see, Sentient Trader is expecting market to fall to form a 20-week cycle trough somewhere over here, mid to late January. And then it should rise up again. Okay, not a very substantial rise as a matter of interest. I see a question. Can you tell the magnitude of the expected fall? Okay, yeah, there we go. So I think that's what I'm speaking about now, is the magnitude of the fall. When I switch to NetViewer and then back to Sentient Trader, it doesn't like it. There we go. Okay, so now that's according to this analysis. Let's have a look at the other analysis. What happens if the other analysis turns out to be true? Where was that other analysis? There we go. What are we expecting here? Well, we are also expecting price to fall into a trough of the 20-week cycle. I hope you can all see that. Well, you can all see it. I know you're nearly Hurst experts by now. So you can all see that here is, of course, let me draw some squiggles on the chart. Here is, of course, the expected range of time for the